Hello there, Stephen Koukoulas, Zagga's Economist in residence with, I guess, a bit of an end-of-year wrap for the economy. And we've ended the year with the economy on a weak note. The national accounts showed that GDP growth only rose by 0.2% in the September quarter. In per capita terms, it actually fell 0.5%. So something that we've always been fearing and seeing about the economy this year is slower economic growth. Interest rate tightenings do work. That's the first thing. The other thing I suppose, a good news story is that the economic linkages between weaker growth and lower inflation are starting to come through. So in the year to October, the inflation rate was 4.9%. So that sounds pretty high, but we're down from 8.4% at the end of 2022. And the run rate's got some very big numbers dropping out of November, December from last year. So that when we get the December monthly numbers in January, we're probably going to be seeing inflation at 3.5%. So just a little bit above the RBA's target range. And all that is fed into the incredible market pricing that we're seeing right now, that we've got markets sort of pricing in no more hikes. This is around the world, not just in Australia, but in the US and Canada, UK, Europe, lots of places. And in fact, they're pricing in interest rate cuts. Now, I don't want to get too excited and say, look, 2024 is going to be a year of interest rate cuts, but I think that is the case. I think we're going to be seeing lower rates coming through the year. Timing and magnitude will remain a difficult thing to forecast from this distance, but I think that's what we've got to be looking for. And for the construction sector, we're seeing things like the Rosehill Racecourse being transformed into a new suburb, I suppose, of Sydney, 25,000 dwelling units there. And I know it's not for 5 years, but we're seeing that policy initiative of the government of trying to encourage local and state governments to ramp up their planning process to get the 1.2 million new dwellings over the next 5 years starting to bear some fruit. Now, clearly the construction sector's ended the year on a pretty poor note. Conditions are weak and there's still cost pressures, interest rate pressures and the like. But I'm being slightly optimistic. Again, I don't want to get too optimistic, but through the course of 2024, I think we're going to see the construction side of the economy start to pick up. Some of the price pressures are abating. We see that from the survey of business costs from the NAB survey. And we've also got the labour market conditions starting to ease. The unemployment rate going up. Okay, it's not a good thing. However, for a business, you can probably get greater access to the people you need to grow and expand. So for Zagga and its customers, 23 has been a tough year. 24 is kicking off on a weak note. There's no doubt. I don't want to be gilding the lily and saying that we're all going to be fine and dandy in 2024. But I can just sort of see a few little hints that, perhaps in the next 6 months or so, the economy will be looking a little bit better. And for construction and housing, things will be looking a little bit better still. Thanks. Happy New Year.